All right. I hope everyone is having a nice weekend. I'm looking forward to another Bitcoin video update here, folks. And so we've got a little bit of a change in the market, obviously, in the last couple weeks. For those of you that have been following me since I've been doing videos, I started my video journey in that region right there, folks. Okay. Uh, for those of my newest followers. Um, I I'm I just feel a lot of similarities to that region right now. I feel a lot of similarities to that region. And first off, I'm not a financial advisor. Um, don't take what I'm saying as any kind of financial advice. The things I'm talking about could obviously go up, they could go down, they could go sideways, and I could be wrong. Uh, the short term, in terms of the last few weeks, I most certainly have been wrong. There's no doubt about that with the Bitcoin price action. With the miners, on the other hand, that's been going the way that we've been covering it. And so let's dive into what we've got going on right here. And I will also say this, and I've been on Spaces recently, and I try to say this as much as possible. I do not trade Bitcoin. I don't trade Bitcoin because at the end of the day, there is not 5 people out of 100 that will get a larger gain through a move like that or through a potential move like that than letting the market do all this work. This is impossible. This is impossible to try to project, even though that's what I try to do. That's what I do on this account. But since I've been posting these videos, my count had been for a 1, 2, 3 I had much higher, 4 and 5. Okay, that's how I've been monitoring this for the better part of a year now. And what's happened so far? Well, we got the 1, we got the 2, and when we were at this level here, this 28, 27, I just said that this technicals chart looked the most bullish that I've seen in all of finance. Okay. We went down another 10% from there, right? But it was still bullish. It was still bullish. Why was it bullish? It was bullish for a couple of reasons, right? It was bullish from the standpoint of just this massive range, okay? This massive range. This is a weekly chart. Capped off by a spring type of event. And if you just, kind of draw your line out of the range, you're simply just consolidating here. This is consolidation. This is what I call a sign of strength. And I also talked about not getting any type of check back. I don't want to see a check back after such a massive accumulation breakout. A check back's a sign of weakness. Okay, folks? So that's important for what I'm going to kind of talk about next. Similarly, when we were in this range, I had kind of called for a, kind of ABC and then 1, 2 coming out of here and moving out into what I believe is going to be an extended fifth. That was wrong. We made a leg lower, which invalidates that first impulse out. And now the question ultimately is this is the bottom in here? Is the C leg complete? And we're going to find out, right? We're going to find out. My intuition tells me it's in. Why would I say something like this? Well, if we look at any of these moves, let's just look at this bull cycle. Let me zoom in a little bit here. During our moves, well, let me back up. I'm sorry. So we had our 1, 2, 3, 4 right into the 30 week. Okay, right into the 30-week moving average, and that's this red moving average that I have up, and made our 5 into 1. Okay, and then we had a 1, 2, 3 flat correction, and so when I'm looking at these corrections, I got to say to myself, all right, what's the length of that leg and what's the length of that leg? So often they're proportionate, so often they're not, okay? And what's an example of they're not? Because a couple of you have posted on my videos, that 1, 2, 3 here looked a lot smaller than right? 1, 2, 3, and that was the case. That was the case, and that's where that count ended up being off. However, if we go back to where we back in August 20, we had a 1, 2, 3, 4, 5 week correction from 1 to 2. 3 to 4 up here was a 2 week correction. So it was, less than half in terms of time. And that's kind of what we were seeing up here. But again, so I just point that out to say it's not always the case. So often it is the case, it's not always the case. But now what are we left with? We're left with, when we look at, and I'm looking primarily at this move from 1 to 2, and comparing it to 3 to 4, because these are the biggest corrective waves so far in this fifth. Okay, and if we just kind of look at these, let me clone it. We see these legs were similar in size, and then if we do the same exercise with our recent moves, let me just pull that down and let's clone that. And essentially it's the same size, right? So it's very proportionate. So that's a good sign, and it doesn't mean that it can't go lower, right? As I said earlier. Now, the key for me in terms of V recovery, I didn't think we were getting down to this 30-week moving average. We did. We breached it, actually. We breached it. And we did the same thing back in August of 2023. Now, what increases the likelihood of two scenarios unfolding for me is the reaction at this 30-week, which right now sits at 58,000. Okay, so let's see how this week closes. I'd love to see it reclaim. We get a reclaim, and that's the highest probability for a V shape, and this count being the highest probability, versus if we come back here and see what happened, we breach, and then 1, 2, 3, 4, 5, 6 weeks under it, right? 6 weeks under it. But notice that leg, that Y leg was in, okay? We did not go lower than that first candle breach. So just because we breached it doesn't mean, and sure, you could go lower here. That's always a possibility. But in a strong uptrend, out of such a powerful reaccumulation, the level everyone wants is this one right here, right? It's kind of obvious, right? Top candle wick, ETF, the week of the ETF, 48,000. Will people get so lucky? Or we'll find out, but I don't think so. I really don't think so. And so the two scenarios in my mind, and let me just back up. Let me back up for 1 second. All right. I'm just going to share another quick chart. The two scenarios in my mind in this environment, I'm pulling up the NASDAQ chart, folks. Okay. I'm pulling up the NASDAQ chart right now. This is the environment we are in. This is a count I've been tracking on the NASDAQ for the better part of 2 years. Let me put this up in line. This is the liquidity environment we are in. We see what's going on here. Do we see what's going on here? It looks a little messed up here. This is a parabolic move that's basically unfolding in front of us, right? We have what you call a bull market correction, right? Bull market correction in a major uptrend. Oh, that top line is awful. And this is starting to get away. That's starting to, this is, you got 1 touch, 2 touch, 3 touches, and this thing looks like it's it's headed for a blow off. It's the only other way I can describe what I'm looking at here. So in the environment where that's what traditional financial markets are telling us, and that's the major proxy. That in global money supply, and let's take a look at where global money supply is right now. The question ultimately is money printing going to stop? let's see. Let's see where money printing is right now. Because I get asked a lot, what's my invalidation? My invalidation is if money, if they stop printing new money, if the need for new money ceases to exist, which in modern times actually is the opposite. The need for new money exponentially goes up. And here we are. This is a weekly chart of global money supply. And where are we? We're at all-time highs, folks. We're at all-time highs. In fact, we're a very similar level as we were looking technically at this chart, right? We had a kind of this triangle consolidation, fake out above it, and then breakout channel, and then parabola, okay? What do we have going on right now? We had same concept, right? Flagging type structure, breakout, kind of fake out above, consolidation. Now we got this kind of broadening channel. And we're at the bottom end of this broadening channel, similar to kind of where we were here. And let me, similar to where we were, let's see, we had 1, 2, 3, 4 runs into it. 1, 2, 3, 4. The fourth run into it here was March 2020, right before there was, 40% of all the money in existence was created forward 2 years. And so, we had a crash in markets down here. The way that the NASDAQ, the way that the Bitcoin looks to me, tells me we've got a crash upwards in the reverse direction coming again. And why do I say this? Just 2 weeks ago, fear and greed in the traditional financial markets was in fear when we're at all-time highs. Crypto, the fear and greed isn't as, I don't think that's as relevant, even though we're in fear right now. It goes back and forth all the time after a 20% correction, though. So there isn't much alpha in that. But the traditional financial one, I think, is a lot more telling to me. But we'll see. There's no guarantee that this is breaking out again like I'm projecting. But folks, it's been tracking. I started posting this chart back here. And so far, we got a breakout, and now we're in price discovery, pre kind of parabolic structure is what it tells me is coming next. So what's my invalidation? This is my invalidation. This cycle is my invalidation, folks. And that's why I don't trade Bitcoin, because at the end of the day, short term, there's no way, right? There's just no way that you're going to capture. You're going to beat that. There's no way. There's no way that someone holding here, or even if you got in here, you're going to get out here with everything. Put it back here with everything. Get out here with everything. Put it back here with everything. Get out of here. Put it back here with everything. Oh, this actually broke this trend line. Get out here, and then it's gone. There's no way. It's impossible. And that's why you don't see a lot of down arrows from me. Because I think it's just an opportunity to mess things up. That's that. All right, I really digressed there, folks. I really digressed. Sorry about that, but I felt that was important. Let me go back to my Bitcoin chart. I don't know that there's a whole heck of a lot to say. Maybe there is a little bit more to say. Maybe there's a little bit more to say. Let's get back to the task at hand here, what I was talking about. And so, okay, so the two scenarios that I'm kind of looking at is whether we kind of, bleed out a little bit here. And the flat correction is much more, I think, prone to, a slow grind out. And again, this was a 2, right? We're coming out of a 4 here into what I believe is 5 of 5. In terms of what I think is going to be an extended 5th wave. And so the bias here is to V-shaped correction. The bias here is to not a long dragged out what everyone thinks is, oh, it's going to be a slow summer, right? Come back before the elections. And the bias here is whether we reclaim this week or next week or whatever happens is here's what I want to participate in. I don't care about, I don't care about what goes on in this range. I don't think we're going back. I don't think anyone's getting, you know, a perfect entry. There aren't, you don't get rewarded in strong uptrends, in my opinion, uh, for missing the majority of a move. There, you know, this would be bearish, really bearish. Like people ask, so technically speaking, this four is still valid as long as it doesn't breach, you know, 32. But that's not, you know, that's a bearish look on a bullish asset. I personally I personally don't even think we get, you know, I don't even think we get that 48K retest. I think the highest probability is, again, that C is in. But time will tell. Time will tell. And coming back again to, you know, remember the feeling in the market coming out of this 2, going into this 3, and this 2 to 3 move exceeded the 4618 extension by about 50%, right? We had 1, 2, 3, 4, 5. That is a major move for Bitcoin in a short amount of time. That was a third wave extension. Our third here, again, coming out of this 2, 1, 2, 3, 4, 5, this hit the 4618 extension. That's a pretty normal type move for Bitcoin, right? You went from 24K to just above 70K. Almost about a 3x move, almost a 3x move. This move, this wave, what was this, folks? Coming out of this 9,800 to 42. So that's 5, right? Almost a 5x, 4.5x. Again, so that's 50%, pretty much more than this move. And if we are truly in, and go back to that NASDAQ chart that I shared with you folks, if you go all the way back to 2009, it's looking to me like a secular conclusion to a massive bull market that we've been in for a long time. So that's the bias on all this stuff. That's the bias on all this stuff, is that's the environment we're in. And Bitcoin is going to reward those with the strongest convictions, and it's going to shed people with traders mentality. Stop loss, put my stop loss there, put my stop loss at 60K. Wait for a reclaim, you know, wait for a reclaim. Are you going to get a perfect reclaim in this scenario where it comes to 60 and it bounces back beautifully and lets people back in? We'll find out if it indeed goes in that direction. So that was long, guys. Wow, I wanted to do a really quick video on this portion of the count, but that ended up being really, really long. So it is what it is. Next up is USDT, okay? So the market share of USDT, I think, also provides us a lot of insight, because basically we're trying to look at the inverse, the amount of money that's pulled into stables versus pushed out of stables during phases in the market, okay? Think about it like the digital dollars, right? People moving their money into digital cash, or taking that digital cash and putting it into work. When this percentage is, and you guys might not need this, guys and girls might not need this, but I'm just going to do it anyway. When cash levels are low on the sidelines, the percentage goes down. When cash levels get as high as they have been historically, they get towards that end of the range. And this is a weekly chart that shows us kind of what happened at key inflection points in the market. And this is a schematic above of a distribution, Wyckoff distribution. And so all-time high in Bitcoin in 2021, what do we see? Okay, historic, you know, range lows going back to 2021. Then you get a push out into a bull flag, okay, type structure. Might be hard to see, into preliminary supply, PSY up here. Why is it preliminary supply? Well, we go back to this candle from June, from the summer of 2021. That was supply. And it rejected. And so preliminary supply hits that level and it flags off of it. And then we get another breakout of that flag into a buying climax of the percentage of digital dollars on the sidelines. and buying climax. And then you get another flag, a flag, a flag, sign of weakness in this phase B. And then it breaks out of this flag into up thrust in phase B. That was the FTX low. FTX low. And then it just kind of consolidated up here. Wasn't a strong reaction. Bitcoin didn't do much for the month of December. Then Bitcoin made its big move in January, right? And the miners ripped. And then it just kind of consolidated, another up thrust, a test. And then what do we get? Bearish, kind of a bear flag, okay? Bear flag into January. So from September through January, bearish movement, consolidation, Bitcoin dumped after the ETF. And remember that, again, sell the news. This is a last point of supply going all the way back to that area, okay? And so bear flag, what is our bias when you look at a bear flag coming out of a distribution in a downtrend? And I've got a lot. I'm gonna unmark this. Sorry, guys. Chart's starting to look messy. What the bias is a breakdown, and that's what we got. A breakdown out of this bear flag at a key inflection point in the market when everyone was saying the ETF was a sell the news event. There wouldn't be any demand. Okay, it was the opposite. And now we've got into this sign of weakness. The sign of weakness. If we look up here, SOW, sign of weakness. And then we got a consolidation, and we've been consolidating kind of in this reverse flagging, bear flag type structure, however you want to draw it. Probably better, more accurate to draw the pole there. But I digress. And now we've got Germany, Mt. Gox, double top. What's the other narrative? Miners capitulating, right? They're selling record amount of Bitcoin at a key inflection point where there's a lot of news and narrative driving. I shouldn't say driving the price action. It's the narrative. I think the price action is going to do what the price action is going to do, and the narrative is going to justify it. Bitcoin, the U.S. government sold thousands of Bitcoin back in March of 2023, and Bitcoin rallied 20% the next week. So, you know, the news follows the price action, in my opinion. And so where are we now? We've got this candle, we've got a rejection, we got an attempt to come back into this range. Why is this range the key? This range is the key is because this was a sign of weakness in phase B. If we kind of look up here at sign of weakness in phase B, this sign of weakness in D and E, this last point of supply, you want to see it reject at that key level. And right now, that's what's happening. We're getting a rejection there. Does it mean it's going to automatically reject and drop down? No, it could kind of hang out here for a week or two. And I could be wrong, and this thing could be going up, right? I just don't think I am. I don't think I am. So my base assumption here is this time is not different. Key inflection points in the market where the news is driving a narrative to justify the price action. Things are generally opposite of what they appear, okay? These are bullish. These are bullish flags. These are bearish. These are bearish high time frame formations, okay? That is done. We're done with that. Next, and last is the miners denominated in Bitcoin. So this was one that we've been on with for the last couple of months, and that is looking at the relationship between the Bitcoin miners and Bitcoin. And since the bottom here in April 15th, for those of you that follow my tweets, I placed my second or third largest derivatives positioning in the miners. 80% of them were in the Bitcoin miners back on April 14th. Or on Sunday, April 14th, I announced I was doing it. The following week. Why? Why did I do that? I did that because fear in the miners was at an all-time high. Everyone was telling us the halving is going to, impact what's going on, their margins, their viability. They're not a good proxy because of ETFs, all this. And all I was looking at was range, very well-defined range, a deviation, and we got to reclaim inside that deviation. That's it. And so where I want to make my largest bets on the derivative side, and I don't recommend derivatives or leverage or anything unless you have really, really high convictions and you do it when no one wants to do it. Okay, that's the key. That's the key when you're talking about margin, when you're talking about options. With options, be prepared to lose everything. Okay, got to be ready to lose everything. I use 5% is the max. Is the max. But when are good times to do it is when nobody wants to do it and it seems like the dumbest. And you're even challenging your own thesis. I was even saying, am I wrong about these miners? I sold some MicroStrategy for Bitcoin miners, here, and I'm like, uh-oh, and it came back down. And so I'm even challenging my own thesis, but my convictions trumped that. And I said, I have to do the opposite of what my emotions are telling me to do right now. Opposite. And so in October, this was my largest positioning in miners prior. This was my second. And right now, what's going on? This is a hell of a move. This is a little bit confusing to me right now. This is, again, WGMI denominated in Bitcoin, because technically speaking, I am watching this line, okay? Because we have one rejection. Here's the origination. Here's our pivot. And so three taps makes a trend line, okay? 3 touches. We don't have a third touch. I have my count, this one, 1, 2, 3, touching and rejecting sometime in the next week or two, and then taking a pause for a few week correction at least prior to making a push to at least this level. And there's a chance we could reprice and the miners start going their own way. There's a real chance that happens as well. But for now, we're taking it one step at a time. And so the next 2 weeks, I'm going to be very, very curious as to this chart specifically, and potentially take some profit on some call options. Nothing with stock, some call options depending on the reaction in this area. Okay, folks? Now, what do we have going for us? We have going for us, Bitcoin literally has been tanking and capitulating, and the miners are just absolutely ripping in the face of that. Several are up 2-3x. WAGMI's up 75% in the last month and a half. And so what I'll be very, very curious to see here is the reaction in this area, but also I want to watch RSI 70, this area here. I want to see, we breached it back in July and it was a good 1-2 weeks, and then we got a rejection. We're due for, WAGMI hasn't seen a true like discovery 70 and then consolidation, and then you just keep hanging out here for a while in a major impulse. And so that's what I'll be looking for here, is the reaction here, maybe take some profits on the short-term calls in the next week or two. The shorter term stuff, the stuff that expires in July and August. And then just see what happens. Still hold shares. See what happens there. I did add to some WAGMI. I compounded to some WAGMI stuff, but that was actually really short term, to be fully transparent. Looking out 2 weeks, which is probably stupid. Don't do that. Just because of the power in this chart, right? It's almost like the opposite. I've learned with how I look at this, right? This tells me that potentially there's a powerful 2-3 week move coming, and then we'll reassess. So that's it, folks. Actually, no, that's not it. That's not it. You guys get one more from me, and then this is a really long video. WAGMI. Let me put this up in line chart because it just looks more. You get the gist of what's going on here. The Bitcoin mining ETF made a multi-year high on this day, which was Friday, on the day where Bitcoin basically capitulated. It was down 27% from recent highs. What's WAGMI? WGMI. So since, let's just call it April, yeah, about 75%, 74%. And on a weekly time frame, again, what am I looking at here? We don't have any signs of concern. In fact, the opposite. I see signs that there's a potential major run. And Bitcoin, I believe, has to cooperate, even though it hasn't had to, if you look at this chart, right, since, May, it hasn't. But the exciting part about this potentially is if Bitcoin does reverse here, then I mean, this RSI it's got room, right? We mean, yeah, you could get a tap there and then a consolidation and then, see what happens. But you've got room, historic room, as it relates to relative strength, and you've got to break out. And I said a few weeks ago that what's gonna happen in the Bitcoin miners, I believe, is not going to make a lot of sense when you compare it to the Bitcoin price action. And the best explanation for that, other than the obvious, which is they're being repriced in front of our eyes due to the AI component of their infrastructure that other companies need and are going to be paying for. And we're already seeing that in some of the deals with cores and whatnot. Is a technical picture that we're in a wave 3. Okay, folks, we're in a wave 3. Wave 3s are powerful. They don't need to make sense, and other things won't. Other things to cloud what should and shouldn't happen won't make sense, other than the fact that this was a brutal 1-2, and then you got this flat correction, a running flat type of correction, which was brutal. This was brutal. And a running flat correction isn't brutal. That was brutal because Bitcoin did a 3x. Okay, that was brutal, and I think that got more people out of miners than any type of capitulation. Than certainly this, right? I think that move got more people out of miners because they question whether or not the Bitcoin miners are a valid proxy, and those worried about the halvening and their effects. And so you got all them out of it, right? And here we are, and look at the volume. Look at this volume coming in. I mean, that's massive volume. This is what you want to see. So, folks, now I'm done. That's it. That's the video. Hope you have a great rest of the weekend, and look forward to doing more of these later. Take care.